No, thanks a lot, Ovi, and good evening, everyone. It's a real pleasure to welcome you. And today it's a very special day. Last year, at the same time, we were launching this huge program. And you know, it's payments in digital finance, because we saw its huge impact on people, on organizations, and how payments is transforming finance. And we believe that it was worth investing into the knowledge. And that's why with Gergerly Fabian, the Budapest Institute of Banking, that we have the pleasure to have with us today, and CFTE, we've decided to create, in collaboration with DIB, to design a special program for finance professionals to get a comprehensive understanding of how the rise of digital currencies and the changing customer behavior drive economy. The evolution of money. And during last year, we spent quite a lot of time to launch this program. And we've learned a lot, and it was the contribution of a lot of people with 30 senior lecturers, contributing experts about the subject. And we were very pleased a year ago to launch it, and it was live, it was online during the Singapore FinTech Festival, and welcoming everyone. And actually, we filmed a lot in this room. But today, 1 year after, it feels better because we can actually meet you in person, and it feels warmer because, you know, it's special. We didn't want it to last it too long to make it, only online, but have also the pleasure to welcome everyone. And of course, today after a year, we have the pleasure to have Gergerly to come to London from Budapest, and he's the CEO of the Budapest Institute of Banking and Executive Director of the Central Bank of Hungary, to be with us and to share this 1 year anniversary about the launch of the program. But of course, this program wouldn't have been able if we were not having also the participation with a lot of people. And we have the pleasure also having senior lecturer Jean-Michel Gaufroy to be and joining us here in our London office. And we also have Ritesh Jain online. He couldn't be with us in London, but he's in London, but he will be online as well. And of course, I have to mention Selection Fred Barr, Michael O'Loughlin, Kim Ford, also Program Director Fabienne van der Riet and Gabor Dalnoki, who couldn't be with us in London, but worked also on this program with us. But tonight, it's also about having, a nice discussion together, because, we are, of course, you being in our London office, but you also online to discuss about digital asset. And we thought with Huy also, how don't we do this event together to discuss about all this regulation that has a big impact on digital assets and vice versa. And so we'll spend time discussing and making it also interactive. So feel free, to ask a question. But I'd like to thank the speakers joining today. And we'll have the pleasure to welcome today Andrea Dunlop, who's going to be here, also joining the session. Ritesh Jain online, Shelley Manion, Huy Nguyen Trieu, co-founder, and also David Birch, who will come very shortly to join us. So thanks a lot again for being here. And without further ado, I would like also to give the floor to Gergerly to come and share a few words with us. And I wish you a great evening. Thank you.
So I'm going to be very short. Thank you very much for coming. It's really, I think it's over 2 years ago when we had a meeting in London, or an event in London with 100 people. But right now, like with this COVID situation, I'm even glad that I pass the border without any quarantine. So I'm quite happy that I'm back in London. And actually, our last physical event was in Budapest. Yes. 20 months ago, and we celebrated that 100 central bankers at the Hungarian Central Bank just finished the artificial intelligence finance course. So it's this is how we started actually the cooperation, that we we realized that we met CFTE, we shared the same goals, same ambitions, and we realized that for instance, for central bankers, it's not enough to study finance and economics anymore, just myself, but we need to be a sort of tech central banker. So it's a really exciting cooperation with us. And indeed, our first main project was payments. Why payments? I think we're going to talk about it. It's a very exciting topic, but for us, since we are a central bank of Hungary background institute, Central Bank of Hungary was introduced mandatory in a mandatory way the instant payment system. So this is how we started. So now in Hungary, everybody is using actually instant payment. It's a mandatory thing, and this is how we had the idea to dig into payments. Invite wonderful speakers, real experts on the field, and why we dig into the payments, we realize that it's much more than just payments or just payments infrastructure. There are lots of exciting topics from CBDC to lots of interesting stories from Cambodia to Sweden, and lots of interesting companies from Stripe to check out. So it's a very interesting thing. I'm glad that I'm here, and welcome again. I hope you're going to enjoy it.
I would like to introduce the first segment of today's event, a wrap-up of the 3 biggest developments in the payment industry, presented from the perspective of 4 industry experts. The format of this segment will be a power presentation, where each speaker will have 3 minutes and 3 slides to present what they think were the most significant developments in the payments industry in the past year. In this segment, we will have Huy Nguyen Trieu, Andrea Dunlop, and Gergerly Fabian, as well as Ritesh Jain, who will be joining us virtually to share their insights. First up, I would like to have Huy Nguyen Trieu, the co-founder of CFTE, to present what he thinks are the 3 biggest developments in the payments. Huy, the floor is yours.
Thanks a lot. Hi, everyone. So we thought a few weeks ago about pushing our experts a bit and having presentations in 3 minutes rather than 30 minutes. I didn't think I would be the first one actually to do it. Do I have some? Thanks a lot. So I have 3 minutes. So in those 3 minutes we spent, with Gergerly, I think we spent, thousands of hours with some of the senior lecturers on payments. I was thinking, how can I summarize it in 3 minutes, especially what has happened last. And I thought that using an analogy would work well, and I decided to use payments is the new oil. I know some people say data is the new oil, but no, I think it's payments. So payments is the new oil would be my analogy, and in 3 slides, I'd like to show you what is the difference or the analogy between oil and payment. The first thing is that vast fortunes were made in oil, and the same thing is happening in payments. Even today, if you look at the largest companies in the world per revenue, 5 of them are in the oil industry. In digital payments, if you look at the 10 largest financial institutions in the world, 5 of them are in payment. This is very new. 5 years ago, 10 years ago, it wasn't the case. This is very, very new. So vast fortunes were made in oil. Vast fortunes will be made in payment. That would be my first slide. The second slide is that it took 70 years of growth of oil, which was unstoppable. From 1900 to 1970, year after year after year, the oil industry grew. This is the same thing happening in digital payments. Digital commerce actually started 20 years ago, and you see that we're really much just at the beginning. The 10th largest e-commerce market in the world, which is Spain, is only at 10%. Will we go to 100% of e-commerce or 50? I don't know, but we're still very, very far from seeing the end of digital payments. So we still have a long, long way to go. And my third slide is it's not just about digital payments, actually. When you have a new oil, And for example, in the case of car, the new oil is electricity. This is when you have huge companies being built. For example, you might know, or you might not, that Tesla, in terms of market capitalization, is bigger than the 25 largest conventional car companies combined. So payments is important. CBDC, NFT would be things that we would have to look at, but who's using that? Who's leveraging that? Those are the new Tesla in payments. So to summarize my 3 minutes, payment is new oil. Vast fortunes will be made. We're just at the beginning. And don't forget the companies which are leveraging on this new oil. Thank you.
Next, I would like to invite Andrea Dunlop, the Managing Director at Access Paysuite, to present her views.
First of all, great to be here. And actually, when I actually put these slides together, so I haven't got much on it, so you're not going to be completely wowed. I did start to reflect, think, am I working in the coal mine of payments? Because I think, you know, when I look at digital assets and the way that it's going, I'm in the old part of e-commerce, still in DD, still in kind of traditional payments. So it does kind of feel like it's the whole coal mines. So what's happening at the moment? I think one of the things that's really interested, hi Dave, one of the things that's really interested me is the mainstreaming of crypto. Visa and MasterCard, I mean, this is just amazing, the turnaround. I don't know how many on the front line running a merchant acquiring business. I don't know how many times I was up in front of MasterCard for challenges with crypto areas. So it's really interesting now that they're starting to open up. And the bit that we don't know yet is actually whether the card schemes will move from a four-party model to a three-party model and go direct to merchants themselves. So I think they're going to be some of the interesting things that we're going to start to see coming out as we start to move forward. See if is this moving? Sorry, I think I've gone in.
It's all right.
Sorry.
No, sure.
Never give me the technology. Okay. The second one that really stood out to me, again, I guess is the Bank of England and HM Treasury actually convening a working group across the industry to start to look at potential UK digital currency backed by the pound. I think this is an interesting move. We're starting to see this obviously across many central banks across the world at the moment. And no doubt actually for the guys here from Hungary, you're probably looking at it yourselves. Interesting move and something that I think will start to come into fruition as we go forward. Clicking the right one. Sorry. It shows how long I've done all this because I can't even operate this. 2 years at home, in my own office, hardly operating anything. Okay, and this is the one that I still really can't get my head around, the whole non-fungible tokens. And interestingly, my husband has this. So he bought a non-fungible token for really old whiskey. But I'm sure many of you have seen the Bored Ape Yacht Club. What's interesting on some of these is particularly that one. I think they sold completely in one day all their non-fungible tokens, and in that one day, I think their sales are around 24 million. And now they're constantly trading those tokens on a daily basis. So I think it's a really interesting space, but more importantly, it's opened up different merchant verticals that we hadn't seen previously. So I think we will see much more of this as we move forward. Not sure yet how I can equate some of this, I think, back into the businesses that I run, but it's certainly an interesting area to start looking at and observing how they're going to move forward. So that's it for me. Thank you very much, everyone.
It would now be interesting to hear from our next speaker. So I would like to invite Gergerly Fabian, the CEO of the Budapest Institute of Banking, to share what his biggest developments in payments this year was.
So I have always two hats. One is education, and the second is a central banker. Sometimes I'm missing up, but it's still two hats. So I'm talking about as a regulator now, and I have a healthy regulatory bias here. One thing is, again, central bank digital currency, and this is a map about who is considering, who is looking at the from all kind of aspects who already started a pilot project. So you can see it's very colorful, but I think the main point is that everybody is dealing with as in Hungary as well. It's going to be an exciting times. I'm pretty sure that it's going, and it's going to be a game changer for everybody which is good from my educational head, because everybody needs to study then CBDC. What is it? Because right now when I'm talking with CEOs, they're not really aware of what it means and what it can mean potentially for them. So that makes it very interesting. It is definitely will be a game changer. 5-10 years, I would say, rather 5 years. Second thing, again, from, as I mentioned, is instant payment is what I really believe it in. Not just an infrastructure, it's a great thing. You see Fed is starting that now, and everybody is starting, even of cross-border parts in Asia. But what is really interesting, what can be made of instant payments when you have an instant payment infrastructure. So it's just the highway, but still on the highway you can create a lot of things with data created. So it has huge potential, which again, it's a very interesting thing, because here two things where central bank can actually ignite innovation or drive innovation. It's a very, very interesting thing actually from a central bank point of view as well. The other, which is very interesting, very new, and it's worth looking at it. And obviously there is a caution when you look at it, but it's coming from, again, the data possibility and the payment possibility. And when we're talking about payment, and we showed that how successful are payment companies, and you see many challengers that are very successful, and basically from zero they grow out to be the largest fintechs, for instance. It's the fact that actually 1/3 of the income of the banking sector is coming from payment and payment-related activities, account-related activities. And one thing is clear: they can be easily challenged. The next layer cake is always the credit, and the buy now pay later schemes are really the ones that are already touching upon the credit part of the story. So that's a very interesting development, and I think it's going to be a very huge challenge for consumer protection as well, and for the regulator as well. What's going to happen? But we see already, if you look at acquisitions, it's a big deal. It's going to be a big deal even if I'm pretty sure there's going to be some backstories about buy now pay later, but it's going to be like blockchain is going to be with us. Thank you.
It would now be interesting to hear what our last speaker has to share. Now we would have Ritesh Jain, the co-founder of Infynit, who will be joining us virtually to share his 3 biggest developments in the payments industry.
I'm Ritesh, and I'm going to talk about the trends changing the face of the financial services. And if I have to pick up the 3 trends in the market, which I believe is changing the face of the financial services, and we have seen a significant growth in these sectors. And the first one I would definitely like to talk about here, buy now, pay later, that everybody is talking about. Yes, buy now, pay later. Now people say buy now, pay later, or marry now, pay later, or shift now, pay later, or do something now and pay later. And that's what is really happening across the market. Why? Because obviously it's removing the friction from the customer journeys. And that's what we see through these surveys as well. The net promoter score for the buy now, pay later is far higher than credit cards or the overdraft, for obvious reasons, because it's removing the friction. And that's what the adoption we have seen across the global markets, or whether we say the valuations of the companies like Afterpay, Klarna, or anybody else. But there are challenges with the buy now, pay later as well. And that's where the regulatory comes into play. So are we really removing the friction from the customer journeys and making it better for the consumers for the longer run as well? Or we are pushing them into a debt cycle, because it is a lot easier to get into debt through the buy now, pay later. So yes, that's a huge debate. We can talk about that later at some other time. So guess what? The second trend that definitely we are looking into the market at the moment is none other than the cryptocurrencies. Yes, I don't want to confuse you with the central bank digital currency. That is, yes, becoming a reality over the period of time, but there's a time yet. So we are talking about the cryptocurrency adoption. And yes, there are various reasons for the cryptocurrency adoption. And one of the main reasons is the investment. We have seen huge FOMO in the market, or we just talk about the Bitcoin. It has gone up to 68,000 this year and come back again. And yes, not only the retail customers, but as well as the enterprises are investing into the cryptocurrencies. And not only the investment, but it is also used for the making purchases. We have seen that adoption through the various fintechs or the banks. They started accepting the cryptocurrencies as payments. So yes, that's another trend which are growing at a rapid pace in the market. Now, the contactless. Yes, we are seeing this for the last 5-6 years specifically, since the inception of Apple Pay or the other NFC payments. And it is growing at a rapid pace. One of the most adopted payment method in today's time is the contactless payment. And the biggest market for this is the Asian market, especially if you talk about the UPI in India, which has changed the face of the financial services or the digital payments in India, which is one of the largest economy. And similarly with the China as well, and the other markets too. But obviously when we talk about the sizes, these are the two countries which leads the number or the volumes for the payments. And the transaction volumes are reaching to 2.5 trillion in 2021 itself. And yes, they are dominating the payments landscape. And there's quite a lot of innovation happening in the contactless payment space. So these are all three trends that I see in the current market, as well as I see them growing at a rapid pace in coming years as well.
Before we move on to the next segment, I would like to invite David Birch, author, advisor, and venture partner at 1414 Ventures, to also share his 3 biggest developments in the payments industry.
Thanks. Sorry, I didn't read the thing about making the slides. I apologise. I didn't read it. A chap can't read every email. You know what I mean? So I didn't know there was going to be a test. I just had like a quick look. So I put. So I wanted to pick 3, and So how would I go about picking 3? So I wanted to pick. I didn't know who was going to be here, obviously. So I wanted to pick something to appeal to a wide demographic. So I've gone for something from the UK, something from the USA, and something from the what's that thing we used to do, the European Union. So I'll put those 3 things together. I slipped my mind already. I've already forgotten all about it. So and I wanted to pick things like it's easy if I stand up here and say, oh, blah, blah, cryptocurrency or something. Well, I mean, everybody says that, so that's not really very... I should say that any mention I make of cryptocurrency are not financial advice, do not constitute inducements to buy any particular digital asset. Any reference to cryptocurrency is entertainment purposes only. I hope that's very clear. So I wanted to pick 3 things that you might not have noticed that might have gone under your radar, which I think are probably, for this audience anyway, pretty significant. So if we start here in the UK, Andrea mentioned the Bank of England task force, which had its first meeting this week. So that's all sorted then. And it's basically taken care of, isn't it? So. And the Bank of England announcement about central bank digital currency, I mean, the announcement was, we're going to set up a committee to investigate the feasibility of creating a study group to look into the possibilities of assessing some of the options that become part of a spectrum of possibilities for later consideration. Doesn't matter because there's no burning platform for retail CBDC. But at the same time, they made another announcement which kind of went unnoticed. And this was the announcement of what they call the omnibus accounts. So what the bank said was, we're going to allow private organizations and utility will probably be the first one of those to get licensed. We're going to allow private organizations to hold balances in central bank money on behalf of third party, i.e. their own customers. So what this means is that corporates will be able to deposit money with the third party. That money will be transferred into Bank of England accounts held in central bank money and then traded as tokens for institutional purposes, delivery versus payment, BVP, whatever. And as my good friend Hugh Van Steenis, who was one of Carney's advisors on this, he said at the time, I don't understand why everyone's going on about the Bahamas sand dollar. I can promise you the Bahamas sand dollar really doesn't matter in the great scheme of things. But I guess retail digital currency is cute. Bank of England omnibus accounts are a really big step forward. And the bank has been, I think, admirably forward-looking, actually. It doesn't date back to Carney, but actually what they've done for the fintech sector in terms of, allowing non-banks to hold accounts and so on. So number one, Bank of England omnibus accounts. Second one from the USA, I thought it didn't really get enough coverage. So we've been talking about open banking for a while, and there's been a lot of conversation recently about open banking not really delivering what it should have delivered. And I think, which is a little unfair, because I think a lot of that stuff's still under the radar. But that's because a lot of the kind of low-hanging fruit IAP stuff, because people found out quite quickly that actually you don't need that much data from the accounts in order to improve lending, especially in the small business space, because SMEs are notoriously poor users of financial services. So people went for the AISP stuff, and that's not that sexy, What we want is payments. What we want is access to payments through open banking, and we want to be able to drive payments not across the card rails, down at the retail level. And what I think about that doesn't matter. What Andrea thinks about it counts for a lot more, but it doesn't count for as much as what Plaid think about it. And Plaid's deal with Douala and all the others to offer those off-card rail account-to-account transfers is a really big deal. Not because of the account transfers themselves, but because the layer people will put off it. So here we call it request to pay for merchant-initiated and VRP for the equivalent of card on file. Those are a really big deal, and delivering those straight to corporates with all the extra data from 222 and everything. So it was one of those little things that just didn't get that much attention in the press, but I think it's really big. Next year is going to be a really big shift towards account-to-account payments. And obviously, I'm not the only person that thinks that. So Visa spent a gazillion on Tink and MasterCard spent a gazillion on Aya. So it's not like I'm the only genius that spotted this. The third one's for Europe. So the consultations on the digital euro, I'm sure you've all read them in as much detail as I have. That's bedtime reading for me. That's how dedicated I am. I threw myself on the barbed wire for you lot reading all that. The consultations on the digital euro, and obviously there was and the thing that got all the attention was the privacy stuff, because if you look at the actual breakdown of the responses, the majority of the responses were at privacy issues, understandable. I thought the most interesting response was the German response, what we call GIBET, the German industry, it's GIBC, isn't it? German something banking committee. Innovative? No, it can't be right. It must be something like that, though. The German Banking Committee, which you would correctly imagine to be one of the most conservative institutions on earth, literally, said, okay, well, we can see the need for retail digital currency and wholesale. I mean, everybody else talks about retail digital currency and wholesale digital currency. That in itself is not that interesting. Well, it's interesting in one respect, which is if you read any of the requirements for a retail digital currency, they can't possibly be implemented using a blockchain or a shared ledger or anything else, but that's by the by. So they said, well, it's interesting. Yes, we understand the reasoning for a retail digital currency, although there's no particular need for one in Europe, which is true because most people have got debit cards and most of the time they work okay. Not everybody. I mean, even in the UK, there's 1 million people who don't have bank accounts. Perhaps there's a shortage of banks. I hadn't noticed. But, and they said, obviously, there's a need for a wholesale digital currency. And actually, market demand for the wholesale digital currency, as per my comments on Bank of England omnibus accounts, is much greater. That's where the actual demand is. And in fact, since there are already, the equivalents working in that market, it must be true. But they said, actually, we think the more immediate requirement is for industrial digital currency, what they call industrial digital currency. And they said, in industry sectors, there's more of a pressing need for, I mean, obviously Germany is more export-led. Well, no, we have exports, don't we? Strawberry jam and things, or pickled onion flavoured crisps or something. I don't know what we've got as Chinese nuclear reactors with. But Germany is more export-led. And they said Industry 4, what we would call IoT, what they call Industry 4.0, the smart supply chain, needs its own money because they want machine money. They want money, they want digital currency, not for people, but for machines. And their argument is that can't be the same because the money that the pharmaceutical supply chain needs is just not the same as the money that the cars thing needs. And if your machine that's making cars needs to order some, whatever it is you use to make cars, rubber or something, I don't know, steel, and you don't want letters of credit, you don't want banks involved, you don't want SWIFT, you don't want any of that stuff. You just want your car making machine to tell the tire making machine, send me some tires, here's some money. That's not going to be the same kind of money that will be used in other supply chains. So they said, we want industrial central bank digital currency. And the more I think, every time I read it, I kept thinking, the more I think about it, the more I realize they're right. We spend our whole time thinking about digital currency and mucking about round at Waitrose, where cards work fine. And we have utterly inefficient supply chains and terrible productivity. And the Germans are thinking this through. So my three things, which probably a little different. 1, Bank of omnibus accounts. 2, Plaid's deal to do the PISP stuff. And 3, German industrial money. So get out and start investing is my point for all of that.